Let me tell you about my friend Alex. Alex works a regular job, saves and invests in index funds. Nothing fancy. One day, he exchanged $500 US for $650 Canadian for a trip to Canada. But a last-minute work project forced him to cancel. The Canadian cash sat forgotten in his desk for months. When Alex finally found the envelope, he decided to exchange the money back to US dollars. To his surprise, he got back $525, $25 more than he started with. He hadn't invested, traded, or even thought about it. The profit came from the changing exchange rate between the US and Canadian dollars. Alex had accidentally made money through currency investing. He realized he'd bought Canadian dollars when they were cheap and sold them when they were stronger. This simple accidental profit got him thinking. If he could make money by mistake, what could he do if he actually tried? That's the core idea behind currency investing. You don't need to be a financial expert. Sometimes, just holding the right currency at the right time can make you money. It's not magic. It's the foreign exchange market at work. Millions of people exchange currencies every day, but few realize the potential for profit. Alex's story is proof. Sometimes, a small mistake can open your eyes to a whole new way to invest. And it all started with a cancelled vacation and an envelope of forgotten cash. Let's see how currency investing actually works. So, what did Alex actually do? He participated in currency investing. It's simply buying one country's currency, hoping it'll be worth more compared to another. Think of it like buying a stock, but instead, you're buying money itself. The exchange rate, the price of one currency in terms of another, changes constantly. Your goal: buy low, sell high. You don't need to travel or hold cash. Today you can do it all online. Many platforms let you buy, hold and sell currencies from your phone or computer. It's accessible to regular people, not just banks. Currency investing opens up new possibilities beyond stocks and real estate. Let's break down how it actually works. Here's a simple example. Say you have $1,000 US and notice the Canadian dollar is undervalued. The exchange rate is $1 US to 1.35 Canadian dollars. You exchange your $1,000 for $1,350 Canadian. You wait. 6 months later, the Canadian dollar strengthens. Now $1 US equals 1.25 Canadian. You exchange your $1,350 Canadian back to US dollars. You get $1,080 US and $80 profit. No stocks, no real estate, just timing the currency switch. This is the basic principle. Profit from changes in exchange rates. It's simple, but timing and research matter. The right move can mean real gains. But what about the risks? Currency investing isn't risk-free. If the exchange rate moves against you, you can lose money just as easily as you can profit. Unlike stocks or real estate, currencies don't generate income. Your gains or losses come only from rate changes. Fees and spreads from banks or platforms can eat into profits, especially with frequent trades. So how do you start smart? Begin small. Never invest money you can't afford to lose. Treat your first trades as learning experiences. Do your homework. Research the economies behind the currencies. Stick to stable countries when starting out. Be patient, don't get greedy, and avoid emotional decisions. Currency investing is a long-term game, not a get-rich-quick scheme. With curiosity and caution, you can add a powerful tool to your financial toolkit, just like Alex did.